On today's video, I'm going to be showing you a simple trading strategy that you guys can apply and use in your everyday trading to achieve consistency and results in your trading. If you are interested, let's get into the rest of the video. Hey, what's up traders? Welcome to Traders Room South Africa. If it is your first time on the channel, welcome to the channel. Make sure that you hit the subscribe button. But if it is not your first time, welcome back to the channel. Thank you for clicking on the video and choosing to watch Traders Room SA. So as you guys can see by the title of the video, I'm going to be breaking down a simple strategy that you guys can apply to your trading. Whether you are advanced or still a beginner, this video is for you. So this strategy is quite simple. It's going to be a continuation strategy, and it's based on continuations in the market. Whether you're trading indices, whether you're trading currencies or anything, commodities, gold, silver, whatever you're trading, make sure that you watch until the end to gain value. Alright traders, before we get into the lesson, I'd like to give a huge thank you and shout out to Mugen Markets. Mugen Markets is basically a broker that we've been partnered with for a month now. They're currently running 100% deposit bonus on all trading accounts. What that means for you as a trader is that you get 100% credit whenever you fund with the broker, meaning that you have more leverage, and that means that you can open more trading positions and the chances of you making more profit in the market are higher. So Mugen Markets is basically running this 100% bonus. And if you guys are interested in claiming your 100% bonus with Mugen Markets, make sure that you use my link in the description. So click the link and make sure that you take advantage of this so that you guys can have an advantage in your trading. Thank you to Mugen Markets, and let's get into the lesson. Alright traders, so we are on the charts right now, and for today's example we will be looking at Euro USD. Alright, so the first thing that you need to identify when using this strategy is identifying the trend of the market. Alright, and how we're going to do that, we're going to start on the 4-hour time frame to identify the trend of the market. Okay, so as you can see on Euro USD, the market has been trending up for the past month. Since the 1st of June, this market has been trending up. The market changed direction and we have been moving up. Okay, and if you can see, previously we were in a downtrend and the market did change direction. Okay, so I don't want to confuse you guys. Let's focus on the current uptrend that the market has been trading within. So another confirmation that you can look at when identifying the trend of a market is to identify the higher highs and the higher lows of the market, right? And it is simple to see that this market has been creating a series of higher highs. I'm going to pinpoint the higher highs that the market has been making. And I'm going to identify the higher lows that the market has been printing out. And that is simple confirmation that we have been moving in an uptrend. Okay, so let me clear up the chart for you and let's keep it at that. So first step, you need to identify the trend in which the market is moving in, and then you can move down to a lower time frame in order to go to the second step. Alright guys, so now that we are on the 1-hour time frame and we have identified our overall trend on the 4-hour time frame, we can now start looking at the second step of the strategy. So the second step of the strategy is basically looking for the market structure. Alright, so what is market structure? Market structure is basically how the market is moving and in which phase is the market moving in. All right, so we have two different types of phases in the market. We have an impulsive phase, and I'm just gonna show you a quick example. We have an impulsive phase, right? And then we have a correction phase, which is basically when the market is moving sideways. And then we have an impulsive phase. So these are the two market phases in which the market moves in. We have an impulsive phase and we have a correction phase. All right, so you do not want to trade correction phases because the market is in a consolidation, and this is where you guys lose money. The trades that you do want to catch is your impulsive moves, and that is what we are looking for on the 1-hour time frame. All right, so let me go back to Euro USD and let's identify the different phases in which the market is moving in. Okay, so first we do have this impulsive phase. All right, and then we have this correction phase. All right, so we don't want to trade this because this is not the overall direction in which the market is moving in. We want to trade the impulses of this market. Okay, and we have another correction phase, and we have another impulse, and we have another correction phase, and we finally have that impulse. All right. So that is basically the second step of the strategy. You want to identify in which phase the market is moving in. So you do want to look out for your impulsive phases, and you want to avoid trading in your correction phases. So as you can see on this 1 hour time frame, basically the correction phases usually do print out either a continuation pattern of some sort, and basically that's what you want to identify on your lower time frames. All right. For example, there's a correction. All right, so since we have identified structure on the 1 hour time frame, and we have identified these corrective moves, this is going to lead us to our third step of the strategy. All right, guys, so going down to the 30-minute time frame, basically on the 30-minute time frame, what you need to identify is your continuation patterns. All right, so on the 1 hour time frame, you have identified the structure of the market, and basically on the 30-minute time frame, your job is to basically take those structures and basically turn them into continuation patterns. All right, so for example, this first structure that we did draw out, if we do adjust our trend lines, basically you can see that this is a falling wedge pattern, right? It's as simple as that. Okay, and what you can see is that the market did break out from this previous high, creating a higher high over here, and basically we had a chart pattern that signaled that there's a continuation coming our way. All right, and basically moving on, we basically had another structure on this market. All right, we basically had another continuation pattern right over here, and if you do adjust your charts, you will identify this simple trading pattern. So if you guys do want an example or a lesson about continuation patterns, just comment down in the comment section, and I will create a lesson teaching you guys how to identify continuation patterns and different patterns in the market. Okay, so if we do continue moving higher and higher, you guys will identify that more chart patterns are being created in this market, and basically you do not want to trade these consolidations, but you want to trade the breakouts, and that is basically what the next step is, right? Trading the breakouts of these continuation patterns. It's that simple. All right, guys. All right, guys, so that is the third step. Okay, so before we get into the final step of the strategy, I want us to backtrack a bit and basically look at all the confluences that we have made from the beginning of the strategy. Right, so on the 4 hour time frame, we did identify that this market is moving in a simple uptrend based on the higher highs and the higher lows that the market is creating. And then we did go down to the 1 hour time frame. All right, so basically what we did look for in the 1 hour time frame is the impulsive moves that the market is creating and the corrective moves. All right, so basically market structure. Okay, and then on our third step that we just did right now, we basically did look for continuation patterns in this market, since we are trading a continuation strategy. Okay, so the final step for the strategy is basically looking for entries, and you do that by basically adding all those components together. Okay, all right, guys, so right now we are currently on the 15-minute time frame, and this is where we want to find our entries. All right, so I am going to remove this trend line so that you guys can see, so that we can have a clean chart, you know. So basically how you do find your entries is to basically look out for breakouts out of your continuation patterns. All right, so the market did break out of this previous high, and it created a new support level. And basically, if you do zoom into your chart, you can see that this market broke out of this structure, right? So this continuation pattern did break out, and you were able to find your entry right over here. Okay, and if you guys did watch the previous lesson, you guys can see the candlestick patterns that I did talk about. This is your morning star pattern, so you would basically want to base your entry right over there, and there you go, your first trade, right? So you do have your impulsive move, you have your correction move, and here is another impulsive move. There you go, guys. It's as simple as that. All right, so we are going to move down to the next move up to the next continuation structure. Basically, if you guys look to your left, you guys can see that this market did break out previous high that was created, and basically this market broke out from this previous high and created a new support level. All right, So like I said, guys, you don't want to trade within these consolidations. You want to wait for a breakout so that you catch the impulsive moves and not get caught out in trades where you have to wait for hours or for days in order to get back into profit. So here we go again, right? Let me just fix this up a bit for you guys. We had the breakout of this continuation pattern. We had that breakout and we had that retest, okay? Like I did say, guys, it is very important for you guys to look out for your chart patterns, your candlestick patterns, all right? So we did have this candlestick pattern over here. And then basically, this is where you base your entries, guys. Just look at this impulsive move. As simple as that. Just look at that, guys. Beautiful move, guys. You didn't have to get caught out in this consolidation phase, which is what we are avoiding, okay? So the final example I'm going to show you is this last continuation pattern right over here. And we had this beautiful buy move, all right? So basically, you start on your left again. You look for the breakout of the previous high, all right? There we go. We had a breakout of this previous high. And basically, we started forming a continuation pattern right over here. As you guys can see, we have a continuation pattern. And the market did break out of this continuation pattern, okay? We had this candlestick close over this continuation pattern and we had a good retest, okay? So guys, it is important in this final step to look out for your retest, okay? Because that is where you base your entries, on the retests, right? You use your confluence, okay? So basically, you had this engulfing candlestick pattern, like I said. If you guys haven't watched the previous video, I break down to you guys the most important candlestick patterns for your trading. And basically, there's an entry. Beautiful move. Look at that, guys. Just look at that. Beautiful. All right, guys. So just a quick forecast for those who are wondering on how to apply this strategy on the current market, right? So basically, we were moving in this uptrend, all right? However, the market did break this previous low that was formed, all right? So basically, there is a signified change of direction that is happening in the market over here. We had this, low that was broken and we created a lower low right over here. And basically, that is when you have to start looking out for market change, right? So I am going to go down to a lower time frame, and this is where you identify structure of the market, all right? So right over here, we do have an impulsive move to the downside. It's as clear as daylight. And then we did have a corrective move happening over here. I don't know if you guys can see it. And then right now, what we are expecting is to have an impulsive move to the downside. All right, guys, so since we have identified this continuation pattern to the downside, basically this channel, we can still see a lot of bearish momentum to the downside. For example, over here, we are having a bearish engulfing candlestick. And I also want you guys to see the shoulder head shoulder pattern that has formed in this market, right? We have the shoulder over here, we have the head over here, and we have another shoulder. And guys, basically what we used for the uptrend in the strategy, you basically apply it in your downtrend. So yeah, guys, thanks for watching and let's sign out. All right, traders, that is the end of the lesson. I hope you guys found a lot of value in what I showed you on the screens behind me. If you guys did find value, make sure that you do backtest the strategy depending on which index or currency pair that you're trading. I usually trade this on currency pairs, so make sure that you do backtest the strategy as well. And if you do and remain consistent with it, trust me, you are going to see results in your trading. So what most traders usually do, they usually change strategy to strategy. And at maximum, to be honest with you, you should be focusing on 3 different strategies at maximum, Like I said, I use this for currency pairs. Obviously, when it comes to indices, I use different strategies. So don't strategy hop, and don't try add too many indicators. All the strategies that I trade, including this one, I use 0 indicators. I use price action only and psychology, basic psychology when applying the strategy. So that is the end of the video. Make sure that you click click the link in our bio to trade with Mugun Markets, which is the broker that we've been partnered with. They have some of the tightest spreads and they're very reliable. And I received my withdrawal in 24 hours, less than 24 hours. And yeah, guys, make sure that you share this with your friends who do trade. And I'll see you guys in the next video. Cheers.